Should you be buying altcoins right now? That is the question I'm going to explore in this video, as well as taking a look at some altcoins. As you can see, also to watch down in the corner, we've got near USDT, VChain USDT, .USDT, and we're also going to look at their BTC pairs as well, because that is something that is often overlooked by both traders and investors, and is something that could have quite a lot of significance in the next week or two. We'll also take a look at all the majors as per usual, so Bitcoin, Ethereum, ETH, BTC, Bitcoin dominance, and a little look into the S&P. If you enjoy our content, please do like and consider subscribing. We do really appreciate it. It does help us out massively. So before we get into the charts, as always on a Monday, we're going to take a look at what is going on in the world of economics. So if we take a look at Market Watch, we've got the US economic calendar, all the big events going on this week, and as it looks, there's not too much jumping out of the page at us, apart from what I can pick out here is the two Fed Chair Powell speeches on both Wednesday and Thursday. A little bit more detail on that when we take a look at Bloomberg. But if we take a look on Friday, we've also got the PCE index, core PCE index, PCE year over year, and core PCE year over year. If we take a quick look at what the PCE is, it is personal consumption expenditures, also known as consumer spending. It's a measure of the spending on goods and services by people of the US, and according to the Bureau of Economic Analysis, the PCE accounts for about 2/3 of domestic spending and is a significant driver of GDP. An estimated total for PCE is compiled by the BEA to measure and track changes in spending and consumer goods over time. This figure can provide an idea of economic strength and how price changes can affect spending. So you're probably thinking, that sounds very similar to CPI. What is the difference? Well, if you take a look at this article from Investopedia, you can get right into the nitty gritty of what the PCE is, and it also shows us what the difference is between PCE and CPI. So you can see it here, PCE price index versus consumer price index, which is obviously CPI. What's the difference? The CPI is compiled monthly by the Bureau of Labour Statistics based on a survey of urban households. It measures the price of a basket of household goods and services that most people buy regularly. Its movement from month to month show whether the prices paid by consumers are going up or down, and by how much. In comparison, the PCE also records changes in prices of a basket of goods from month to month. It is broader in scope. It factors in price changes in the entire output of the economy, as well as changes in out-of-pocket costs to consumers. So basically a more detailed version of the CPI, measures some slightly different stuff, but essentially it's just another tool of tracking inflation. So of course, if inflation is coming down, that is good for the markets, whereas if inflation is sticky or going back up, then that is going to be bad for the markets. And it means that the Federal Reserve is going to have to take more action in terms of trying to get inflation down, which is usually done by rate hikes. And that is what leads us quite nicely onto the Bloomberg screenshot of the key events from this week. So again, not too much jumping out at us, but the main things to look for, we've got the ECB President Christine Lagarde speaks at the ECB Forum in Portugal, and on the same day, the following day, we have the Federal Reserve to unveil results of annual banking industry stress test. So as we know, a lot of smaller banks were coming under a lot of pressure and even folded under the rate of hikes that we've had coming out of the US. And on the same day, we've got the policy panel with the ECB's Christine Lagarde, Fed Chair Jerome Powell, the Bank of Japan's, I'm probably going to get this wrong and butcher it horribly, but Kazuo Oeda, and the Bank of England's Andrew Bailey, all at the ECB forum on Wednesday. So of course, they are all in charge of their respective banking policies. So in charge, probably be talking all about recessions and rate hikes and their strategy going forward in terms of trying to tackle inflation. So could be an absolute nothing burger, or we could get some big sound bites and quotes coming out of that in terms of their future strategy. So, you know, talking about pauses, hikes. I think cuts are very much off the table until next year. At least that's what Fed Chair Jerome Powell has told us at the last FOMC meeting. So, as I say, it could be a bit nothing burger, or there could be some really key pieces of information and strategy going forward. So, look forward to that. Apart from that, not too much else. So, that's all that stuff out of the way. Let's get into the charts. So, what I'm going to do is I'm going to go through the majors as per usual. I'm going to do BTC, ETH, ETHBT, Bitcoin dominance, and take a quick look at the S&P. Then we'll go and take a look at the alts to watch, both from a investing strategy or an investing perspective, and then a trading perspective. So a bit of both. So let's quickly shoot through Bitcoin. Not much has changed too much, apart from the fact we are now trading on the higher time frames, I should say. Apart from the fact we are trading above that key level of 29.3k, that key monthly level, which has been solid support in the summer of 2021, and key resistance this year, as we can see. Both monthly candles, the previous 3 monthly candles, all testing and rejecting. However, as I say, we are looking like closing above. Another 4 days to go. That will be a very bullish sign if it does, as long as it doesn't, of course, just then roll over and deviate. But you can see the nice bullish bounce off 25.2, leading to a potential close above. As I say, would be quite bullish for continuation. If we look at the weekly, haven't quite tapped that 31.775 level that I've been looking at for a while. I thought we were going to tap it back here when we were trending up in April. Didn't quite make it. Then I thought we were going to tap it this last week. Didn't quite get there, rejected from about 31.5. So at the moment, as we talked about on Friday, a potential double top forming here if we have a bearish week. But of course, if things turn around and we come up and test 31.775, we could close above that and hold, and then you're probably looking at 34s, 35s, stuff like that. So a big week indeed. So as I say, do we confirm this double top or do we break upwards? If we go to the daily time frame, the key levels to watch out for, I think we can get rid of 26.6. That's not really relevant anymore. However, this daily level here at 28k is relevant, especially if we break below 29.6. So we had a nice little bullish retest of 29.6 when we broke above it on Wednesday. On Thursday, as I say, we come up, bullish retest, and then went on from there. But we've been breaking down all over the weekend and including today. So big area 29.6. If we break below that, then the next daily level for me is 28k, and as we know, that has been a big level ever since the beginning of May. It was support. We broke below on the 8th of May, and there was resistance ever since, and it's the last resistance that we've broken through, apart from, of course, 26.6, which, as I say, if we break through that, 28k is the next area. So that is something to look out for if we do break below. We'll go to Ethereum on the higher time frames. So let's go for the monthly. As we can see, another green monthly candle, or it looks like it, another 4 days to go. So quite a big range of prices over the past 3 months on ETH. Yet the monthly candle closes really haven't gone anywhere. As you can see, we've spiked all the way up to 2,100 and as low as 1,600, but yet we still close in and around this sort of 1,800. Well, in fact, we haven't had a close above or below the 1,800. So very interesting there. But so far, another bounce off 1721, holding it on the monthly time frame. On the weekly, we deviated 1783 weekly level, as you can see, but we've come up to this quite key level of resistance. You can see it around 1900s. It was the top of this rally back here in May. We actually haven't traded above it since. So we've had one weekly candle close above 1900, which was this candle here on the 10th of April, which we went all the way up to 2.1k and then immediately retraced. So a very important level here. If we can get a weekly close above sort of 1930, then we can push on to 2k. If we can break 2k weekly, hold and close above, then we can test this monthly level up here at 2,300. Alternatively, if we break down, again, the same battle that we've had for the past 2 months now, really. Weekly level of support 1783, monthly level of support at 1721. I really thought this weekly candle close a couple of weeks ago signified that we were going to break down further. Talked about potentially coming down to 1370, but as we know, last week Bitcoin had a nice bounce, so did ETH. So let's take a look at ETH BTC, because this is the main chart that you want to be keeping an eye on in terms of altcoins and the near future. So as you can see, we're basically in a range here. So the range high at 0.07, we talked about this when it was looking to break out this bearish trend line, said that was a big level of resistance. We can see we rejected and we've just been down ever since. And then this range low down here at 0.062, which we formed back at the end of March. So we're back at these lows here. Now you can see we've had a weekly candle close below those lows, but if we manage to get a weekly close back above that weekly range low of 0.062, that would be very bullish. So deviations of a range can be very powerful plays, both in trading and investing. So if you get a deviation of a range, that is usually a very, very strong signal and high probability trade. So if a bearish example, if I just quickly bring up the BNB chart, which I'm sure you guys have seen if you've been following this channel for a few weeks, an example of a bearish deviation. So we take a look at BNB. You can see on the weekly time frame, we've got this weekly range high, got back up, we got above, we broke back inside, and then it was very bearish, and you can see we pretty much almost broken down to the weekly range low. So the bullish version is of course a deviation back inside a weekly range low. So that is something to look out for. If we do that, get back inside, then we can trade up, probably back up to this weekly level, which is actually the mid-range. We just grab the fib tool and just show you, if we go from that range low to range high, this 0.066 level, still a significant level as it is bang on the mid-range. So as I say, if we get that deviation back inside, could trade up to the mid-range and where it meets this bearish trend line, but that still could just be a lower high and a continuation, but something definitely to play if we do get that. Otherwise, we'll probably just break down further, down to this 0.05 level, which is the monthly range low, which will be a very, very good area for buying alts. However, as I say, do we get that deviation, which would coincide with the Bitcoin dominance chart hitting some resistance and retracing? So as we know, burst it through that 48% level of resistance and now heading towards 52%. Well, 52, 53% key level resistance. Of course, take it with a pinch of salt. This is not an actual asset with a price. It is just an index, but it has been proven to be a very useful tool and good indicator in the past. So as I say, if this comes up, starts looking weak around resistance at 52, 53%, ETH BTC starts to deviate back inside that weekly range, then we could have a good time for alts. So a couple of key indicators to watch out for there. So let's take a look at the S&P now. Last week I was talking about, so I made a video, I think the title was roughly dollar up, Bitcoin down this week, question mark. I got 2 out of 3, so I thought that we were going to have a bearish week on the S&P due to the fact that the VIX was super low, and that on the monthly candle we were going to just get a huge wick and close below this monthly level of 4327. We did get a bearish week on the S&P. I also thought that the dollar was going to be bullish, seeing as it was bouncing off the weekly range low. Again, we did get a bullish dollar off the weekly range low, and I thought that due to the relative weakness shown by BTC against the S&P, so you can see the S&P had about 6 weeks of green candles and BTC had about 6 weeks of red candles. I thought that with that relative weakness, Bitcoin was going to perform even worse. So if the S&P pulled back, then BTC was going to drop even more. And as we know, BTC decided that it wanted to shake off that relative weakness. It didn't care about the dollar bouncing and just gave a massive green candle. So I got 2 out of 3, but it just goes to show you can't be right about everything, and that's why it's always good to, if you're trading, use a stop loss, hedge if you're investing, etc., etc. So as I say, hold my hands up, got it wrong on BTC, even though I got it right on the S&P and the dollar. But as I say, it just goes to show you can't be right about everything. So what am I thinking about the S&P? As I say, another 4 days to go, a full week to go. We've got a couple of things that could come out midweek. We talked about that earlier. So if we get another bearish week, do we close below that 4327 on the monthly time frame, which I think personally would be very bearish. I think this would just be a blow off top. We've hit resistance here at the swing high of the 1st of August, and then we drop lower potentially. Or if we do get a monthly candle close above 4327, as I say, at the end of this week, then maybe we push on and test 4588, which is the swing high here of April. So either one of these, I know it's quite a broad statement, but we are definitely going to get a pullback at some point on the S&P. I mean, the VIX is absolutely on the floor, levels we've not seen since COVID crash. So yeah, either we make a huge wick here and close below 4327, or if we do get a monthly close above, maybe we push up to 4588 and pull back from there. So that's all those out of the way. Let's take a look at some altcoins, and as I say, I'm going to talk through each asset from both an investing perspective and a trading perspective. So investing perspective, I'll be honest, it's pretty much the same outlook on all of them. They are super low in terms of their previous all-time highs. If you take a look at NEAR, still below $2 with an all-time high of $20. So you're still looking at a 10x from here, which is absolutely crazy. Yes, it's up about, about 30 odd % from the bottom. It's up 35% from the local lows. We made new yearly lows a couple of weeks ago. Yes, it's up 30%, but still a huge markup to go if it reaches the top or the previous all-time high. Don't be that. If you really like, again, nothing said in today's video should be considered financial advice, all that good stuff. Wow, Bitcoin's just dropped a bit. Wow, I just noticed that. yeah, shouldn't be taken as financial advice, all that good stuff. But if you do like NEAR, if you want a bag of NEAR for the next run, then definitely don't be scared of buying some here, because you don't want to be FOMOing in as it breaks above the weekly range highs here at $1.83. Pick up a bag here, and then obviously just be prepared to buy a little bit lower. We're miles and miles away from all-time highs, but we might not be that far from the bottom. Even if we do break down lower, I think down at $1 may well be the bottom here, which was the start of this leg of the move back in December 2020. So December 2020 prices on all these alts, just an absolute dream compared to where it was at all-time highs. Now, again, you can see this is a really good example of a bullish deviation. You see the weekly candle close we got the 5th of June, which was below $1.25 range low. Bearish, what I thought was a bearish retest. I thought we were going to break down further after that. It didn't. It got back inside the range, and it's been very bullish ever since. If we go down to the daily time frame, you can see as soon as we got back inside the range, it absolutely went. And so from a trading perspective, these might all have changed now. I see Bitcoin's dropped a decent chunk, but essentially I was going to say look out for this weekly level, or this weekly mid-range daily level, which is around $1.66. It's this level of resistance here from back of the 20th of May. As I say, if you get your fib tool, you can see that is pretty much a perfect mid-range. You can just mark out the box between $1.66 and the actual dead-on mid-range at $1.68. Not that much of a difference. But it's this level we've not traded above since the 20th of May. Could be a decent short opportunity, or which would then, if it rejects at the daily and then ends up closing below the weekly mid-range, then that would be pretty good. Just another lower high and trade it back down to the range low. Or if you get a daily close and hold above that level, then trade it up to the range high and maybe beyond. And then we'll cover the BTC pairs separate in a minute. Let's go VeChain again. From an investment perspective, absolute bargain down here. Absolutely miles and miles and miles away from all-time highs if it returns to it, and may well be the bottom may well be in. As you can see, we tagged these weekly range lows. Personally, I don't think so, but at the same time, I think you should be able to handle any drawdown from here. Again, if it's a case of you haven't bought a bag yet and you want a bag, wouldn't be afraid of buying here and missing out on the small pump we've had so far. With 25% off the lows, wouldn't worry about that. However, if you do already have quite a bit, then maybe wait for some slightly lower prices. If we go onto the daily, from a trading perspective, very similar to NEAR. If we get a daily close and hold above this day level at 0.0189, then you can run that potentially long to the weekly range high. Or, unfortunately, so what I was going to say in this video was jump into a short here, but unfortunately it's literally just dropped since I started recording, so probably not as good of an entry, but you could still jump in here with your stop loss being above today's highs. So obviously it's about 6-7% now, and it might be more when the video comes out, but obviously manage leverage accordingly. But if that does continue to hold, then obviously trade that down to the range lows. And then finally DOT, again, it's in what I like to call a an accumulation range here. This is where all the accumulation was done back in 2020 before the last bull market, and it's probably the same range we're going to be accumulating in again before the next run. There's monthly range low around high $3, low $4, range high around $7, $7.50, with a monthly mid-range weekly low at $5.57. Again, if you haven't got a bag yet or a small amount, definitely don't hesitate to buy some here, just in case it does. Just in case it has already bottomed. As I say, this is a very key monthly level that we tagged last week or 2 weeks ago. So yeah, may well be the bottom. Personally, I don't think so, but it could be. And you don't want to be that person that didn't buy it any or enough, and then we start breaking out the monthly range high at $7, $8. Remember, all-time high at $55. If we return to that now, it's still a 10x. As I say, you don't want to be that person that didn't have enough or any, and we're breaking out at $7, $8. Remember people FOMOing here back in February when we were about $7.50 looking to break out, and now look, we come all the way down to $4.23. So yeah, definitely don't hesitate if you do like DOT to grab a bag. In terms of a trading perspective, again, we've got this important daily level here at $5.20. It's been absolute key resistance and support in the past. We've come up and tagged it, and again, when I started recording this video, we were right on the level here, and I was going to say you can obviously jump into a short with your invalidation being nice and tight, which is simply a daily close and hold above $5.20. call it $5.27. Of course, that's moved a little bit slightly. But again, alternatively, if we do get a break and hold above that level, as you can see, that's been a really solid support. So that could be a nice long to the mid-range and then potentially up to the range high if we really do carry on this rally. And then finally, let's take a look at the BTC side of things, alt BTC side of things. So again, if we go onto the monthly time frames, on near, you can see absolutely miles and miles away from all-time highs in the BTC pairs. A return from here to all-time highs, you're looking at 800%, which is huge. And as I say, we've got this monthly level down here at 5,750 sats. Held it last month, dipping below this month. However, what if it recovers? What if the ETH BTC chart, as I say, deviates back inside that weekly range? What if Bitcoin dominance finds some resistance and alts go for a little run? It's about 10-13% to get back above or reclaim that level from here. And then what if it goes on a run? If we go to the weekly time frame, we've got this weekly level here at 6,600 sats, which was the previous higher time frame support. And a quick run back to that, even though it's already pumped a little bit, it's still a 30% gain from here. So absolutely huge movement still to go. You've not really missed the boat here, even if you jump in here. We take a look at VeChain, is the same on the monthly time frame, testing this level here at 57 sats. What if this is the new accumulation range between 57 sats and 93 sats? It was the range back here in 2019, as you can see, before it broke out. So what if it just bounces between these two levels? A return to the monthly range highs from here is still a 53% gain on your Bitcoin, which is not to be sniffed at. And again, on the weekly time frame, you can see it could be quite a quick move. So definitely keep an eye on the alt BTC pairs. And then finally, .BTC, again, we're breaking below this monthly level, all-time lows down here at 1792, but we've still got a few days of the monthly candle left. What if, as I say, the stars align, ETH BTC and Bitcoin dominance do their thing, and .BTC returns and holds this level, this monthly level before the end of the month? And then what if it just bounces between here and this level at 2,648, the last monthly support, which we bounced off in June last year and January this year? Well, if it recovers from here just to get back to that level, that's 5%, obviously nothing huge. But if it then goes back all the way up to this, let's call this a monthly range high, then that is a 54% gain on your BTC. So, as I say, something that a lot of traders can use the alt BTC pairs as confluence with their USDT trade ideas, and investors, don't forget that you can multiply your BTC as well as your USDT by using the alt BTC pairs. And also, don't be scared, just because your alt may have pumped a lot in USDT, it might have even lost BTC value. So just because something like NEAR has got away from you in the USDT pair short term doesn't mean it can't make gains in the BTC pair. And of course, as I say, you can use your BTC, put into alts and build that BTC pot up as well. So something to look out for. As I say, look out for ETH BTC and Bitcoin dominance to potentially turn. ETH BTC to make that weekly deviation back inside the range, and Bitcoin dominance to hit resistance to start slowing down. But as I said, during my recording, BTC has had a little drop. Let's take a look at the 1 hour. Okay, somewhat of a drop. As I say, on the daily, have a look for 29.6. If we lose that level, then have a look at 28k. But yeah, hope you enjoyed the video. Hope you found it useful. As I said at the beginning, if you do enjoy our content, please do drop a like and subscribe. And I'll catch you all on Friday to see how it all went.